Welcome to Wednesday's edition of Inside India. I'm Sri Jegarajah. Here are your headlines. India's Commerce Minister heads to Washington later this week for trade talks as the US looks to speed up trade deals. Tata Motors is reviewing its guidance for its Jaguar Land Rover luxury unit due to US tariff uncertainty. And India's latest inflation data falling to near six-year lows, fueling expectations that the RBI could ease policy further. Right, let's start the programme by taking a broader look at the Asian markets. And despite the tailwind, arguably, from what happened in Geneva and substantial progress over US-China trade negotiations on tariffs, we are seeing some pockets of softness, most notably on the Nikkei 225 index, down by just under 1%. However, the resiliency is in the Kospi, up by 1.2%, and the TAIEX, 1.3%, and we're seeing some strength and a bounce back on the Hang Seng Index, up by 1%. We do want to show you shares of NVIDIA, which soared overnight, bringing its market cap past $3 trillion for the first time since February. This as the US secured $600 billion in commitments from Saudi Arabia during Trump's trip to the kingdom. Chips were a big part of it. NVIDIA and AMD both announcing deals with Saudi AI startup Humane to sell hundreds of thousands of its latest AI chips and helping to build AI infrastructure.
You've heard plenty about the capabilities of artificial intelligence. You've also heard how AI is going to transform every single industry, meaning that it's going to be the infrastructure of every single industry. And Humane is going to be building the AI infrastructure here in Saudi Arabia.
Saudi Arabia's access to these AI chips signals the Trump administration's new approach to chip export curbs. The US Commerce Department has ended the AI diffusion rule introduced by the Biden administration just 2 days before it was set to go into effect on Thursday. US will likely now negotiate deals from country to country. Initial rules were created as a way to crack down on China's access to advanced chips. And the Commerce Department says it still will be issuing guidance against China, warning companies from allowing American chips to be used in Chinese AI models and also warning them not to buy Huawei's Ascent AI chip. Let's turn it back to India and the markets there. Join us in about 45 minutes' time. Let's give you GIFT Nifty futures, and they are indicating an open in the region of 24,730. So that would constitute a 200-point or so lift at the open, given where we left off at 24,578. Let's give you the dollar-rupee exchange rate, and we are seeing continued strength in the Indian rupee at 85.06 against the dollar. On the macro side, inflation in the country saw sixth straight month of cooling. Headline CPI eased to 3.16% in April, coming in better than estimates, thanks to low food prices, which make up nearly half of the consumption basket. These levels are also the lowest in nearly 6 years, giving the Reserve Bank of India more room to cut interest rates and spur growth in the broader economy. In the meantime, in the IPO space, Indian Fintech startup Moneyview has reportedly approached bankers for a $400 million IPO. The unicorn firm that's backed by the likes of Tiger Global and Excel is betting on the IPO frenzy in India. The proposed issue is likely to have both a fresh issue and offer for sale component, where we could see existing investors offloading their stake. Moneyview joins a list of other fintechs in India like Razorpay, PhonePe and PayU India vying for a public listing. Let's get more on the fintech ecosystem in India and bring in Sandeep Patil now, partner and head of Asia at QED Investors. QED is also betting on India's fintech space, planning to invest another $300 million in the country. Sandeep, welcome to Inside India. QED is invested in OneCard, Jupiter, Refine, Upswing and Efficient Capital Labs. What are the thematic strands within fintech that really ties them together and defines QED's strategy in this evolving space?
Yeah, first of all, thank you so much for having me. It's wonderful to be talking to you and talking to your audience. I head our investments into APAC. We have been active in Asia since 2020. We have invested about $220 million across a number of companies. And as you said, there are a few thematic themes that tie these companies together. Consumer is a very big theme in our investments. Jupiter, OneCard, both play directly to that theme. And it's essentially talking about the fact that as the GDP of the country is growing, there is a rising in middle class and a rising affluent class, which has far higher disposable income, and the growth of that disposable income is substantial. These categories of customers then have needs for borrowing, for investments, for savings, insurance, you name it. So financial services becomes a prime growth vector on back of the growth of the segment of population and the growth of their income. So OneCard, Jupiter, and Refine, all three play into that theme of growing professionals. Efficient Capital Labs is really a play on increasing trade opportunities coming out of India. What they do is they provide revenue-based financing for SaaS companies manufacturing in India, but then selling into the US market. And so it's riding ahead on the curve of that there'll be growth in software services in India, but also development of AI and other technologies in India, which will then get exported to the United States. Upswing is a bet overall on the growth of financial services in general and kind of increasing connectivity between banks and fintech companies, consumer technology companies. So it's an overall sectorial bet.
Thank you for that, Sandeep. Let's just get deeper into some of your most compelling thematics, including cross-border finance, and what opportunities could arise in that space now that there is a UK-India trade deal and quite potentially a EU-India trade deal and a US-India bilateral waiting in the wings.
Yeah, look, I think as the trade routes get reset across the world and as you see more of these free trade agreements or low tariff trade agreements come to place, there'll be a growing opportunity for India to export to the rest of the world. The exports will be not just in the form of services that we have historically seen, but you'll see increasing software exports and increasing goods export to these countries. So the most apparent opportunity coming out of these is in payments, where you facilitate overseas transactions. The documentation for some of these verticals is quite complex, so you help simplify documentation for exporters and importers alike. But I think there are bigger opportunities here in terms of financing of these transactions, insurance on back of these transactions, and then how do you manage cash management for overseas assets and investment opportunities that spring out of it. So this is a big vein of opportunities that's coming the way of India and sort of startups in India. And we are very optimistic that it can be a growth vector for the country.
Understood. Let's get into embedded finance, Sandeep. And a recent report by Elevation Capital put this space at a $25 billion opportunity for India startups, for financial services and the digital space. Which startups then are doing the most compelling work in developing this area and winning that market share?
Yeah, look, I think embedded finance is an emerging space in the country. The best way to think about embedded finance is the companies and the startups are engaged in more of an operating activity, and then finance becomes the primary vector through which they monetize their customer base, right? So these companies typically have access to either proprietary set of customers or are able to target customers at a point where other people are not able to market to them, or have extensive data access that can help them underwrite better. So we are investors into companies in LATAM, for example, which are involved in exporting to US and then provide exporting and logistics to US, and then can provide finance that for working capital utilization of the exporters, and that then becomes a source of revenue for those companies. To such an extent that the logistics becomes the base service which the company can provide pretty much at very low cost, because most of their revenues are actually coming from financing activities. So we expect similar companies to emerge in India, which would either have maybe a leg in logistics, maybe a leg in e-commerce, but finance then becomes the primary vector on which they monetize and drive revenue growth.
Let's bring in AI, Sandeep, and one of your investments is in QED's investments, and you have global reach, was in Swedish buy now, pay later firm Klarna, which interestingly replaced some human workers with AI last year. Now it's going back to humans. Chamath Palihapitiya has said that this could have broader issues for AI-first fintech startups. Is this a challenge or a future challenge that applies to the ecosystem in India? And what's your advice to founders on managing this challenge?
Yeah, look, we are at a very early stages of AI as a technology. I think it's going to emerge quite a bit more, not just in terms of the level of models that you have, but the specialisms those models would have and how those models can operate. Also in terms of the efficiency of those models and how small a footprint of data centers and power they can operate in. Right, so we'll see emergence of models that are more localized, that can run within bank walls and be responsible for user acquisition, user service, and so on and so forth. So what we have seen with Klarna is sort of a push towards kind of taking the customer service lens completely on AI and then bringing some of that back in because there were increasing needs from customers. These things will keep happening with the different players. Most technologies have a kind of 2 steps, 3 steps forward, half a step back kind of journey. So I'm not too surprised by it, but I think AI as a whole, as a technology, holds a lot of promise, particularly in India, right? Because you have a lot of diversity of languages, diversity of customer needs, diversity of customer segments, right? Which each have different needs. So I think that AI in particular can hold a lot of promise in building products for different customer segments and then servicing them. Lastly, I would add that much like UPI, right? India provides a population scale unlike any other market pretty much, and so the technologies that you build in India can be of relevance to other parts of the world, UK, Europe, US in particular.
Sandeep, let's turn to the mighty and evolving Indian consumer and their growing need and appetite for financial services. Quick commerce wave in India and consumer fintech solutions, they really seem to be a marriage made in heaven, don't they? Or how big is the opportunity there? Or is there a risk that quick commerce has been overhyped? And just walk us through the challenges and the pitfalls and the opportunities as you see them.
Yeah, look, I think quick commerce is a very India phenomena. It started in other parts of the world also, but it's a very India-specific phenomena because the demand density that you can see in Indian cities is pretty much unparalleled around the world. And so the ability to serve them through dark stores and through localized deliveries is phenomenal. Right, but retail as a whole, as a segment as a whole, probably has 18, 20, 25% margins. So quick commerce is really kind of driving on fairly thin margins on top of it because you have all the customer acquisition costs that come from acquiring customers over the internet. You have the last mile delivery costs in addition to all the costs that you have associated with retail. So there will be some back and forth on it. I think there is a core of the matter, there is a core set of customers, core set of products where quick commerce can actually be quite profitable, but expansion beyond it will require some innovative solutions, which we'll hopefully see over the next few months, years to come.
Sandeep, regulators, fintech startups, the broader ecosystem, they simply do not seem to be on the same page, do they? Is this a space where the tech is evolving so quickly that the official rules of the road are having a hard time keeping up? And then, as a consequence, the consumer suffers when there are no guardrails against fraud, hacks, the proliferation of consumer debt and excessive risk-taking. In your opinion, then, what is the way forward? How do we square that circle?
Yeah, so look, I think fintech is different from rest of technology innovation because it operates either in or very close to highly regulated industry, financial services, right? And financial services is all about trust. And a lot of that trust actually comes from the fact that regulators not just put strict guardrails on the behavior of companies operating in the sector, but also act as a customer protection layer, right? So they watch out that the decisions are in the interest of customers. So it's been a journey for fintech companies to learn that this area of innovation is slightly different than more open areas of the economy, where you could come in, break things, move fast, and then sort of let rules catch up, right? Especially in India, I think regulation has been quite properly defined in terms of setting the right rules and guardrails for fintech companies. But we see, especially in India, we see the regulator has a very forward-looking attitude. Otherwise, development and growth of UPI would not have happened. The innovations that we have seen in terms of KYC, account aggregator, other capabilities are simply phenomenal, right? So we're actually quite excited that India benefits from such a forward-looking regulator, and that they are taking active role in guiding the ecosystem. There might be some short-term pain for the companies to bear. That's okay. I think usually what we have seen is once there's regulatory clarity, then the pace of innovation, the quality of innovation, and the value of those companies that are innovating goes up pretty dramatically. So we are quite optimistic and very excited about it, that finally regulators are kind of getting comfortable with the sector, and hopefully that will open up opportunities for greater growth in the sector in the country.
Sandeep, what's the preferred exit option or strategy for the portfolio companies, the fintech portfolio companies under the QED stable? And a broader question, do you feel that the IPO drought is going to end in FY26, possibly even earlier? And whether it's PayU, Incred, Pine Labs, who do we need to keep an eye out for? And who do you think are the front runners to list?
Yeah, look, I think that's one thing that has been phenomenal about India to observe in 2024. The number and the level of capital realization in IPOs has been phenomenal. It's no secret that IPOs are the favorite way for VCs to exit, not just because it affords us greater exits, but also because it's a proof point that the companies that are built are durable and enduring, in fact, to survive public market scrutinies, that the processes and the assets that they have laid out can become durable customer assets, right? So it's very exciting when companies go public. And Indian market really proved in 2024 that it's a country where you can build companies for a public scale, where companies can survive that kind of public scrutiny, and Indian investors are very keen, have a very keen appetite to invest in technology companies. So from an international VC perspective, I think it's fantastic. 2024 was really phenomenal because it gives us a very strong data point that there real exists to be realized in this market. And that strengthens the investment case for the country even more, right? As to the names that you mentioned, I won't pick particular companies, but I'll be watching out for all of them because they will set aspiration for the overall ecosystem in terms of how high the bar can be on not just valuations that can be realized, but the amount of capital that can be raised from this market.
Sandeep, you preempted my last closing question. How would you characterise valuations for the most promising Indian fintech startups amongst your portfolio companies? And do you see any of them with the potential to achieve unicorn status?
So one of them already has a unicorn status. OneCard is already a unicorn. But look, I think valuation is a milestone. Valuation is not a destination. Unicorn status is also a milestone. It's not a destination. These companies are building for the long term. They want to become enduring organizations that really provide very good value to their customers and therefore could return very good value to their shareholders, to their employees, to the founders, and so on and so forth. Right. So far, we see all of them progressing fantastically well. We are very optimistic about what future holds for each one of them. As to multiples, I think Indian market has a uniqueness premium, which is why we observe higher multiples in the Indian market, especially relative to global markets, and that will endure for some time at least till the market kind of becomes more mature. But we are several years away from that kind of journey.
Sandeep, we'll wrap it up there. Thank you very much indeed, sir, for joining me. Fascinating conversation. Sandeep Patil there from QED Investors. Right, a little PSA before we head to a break. You don't need to be on your TV to watch Inside India. Now you can tune in to the programme while you're on the move. Catch our live stream on YouTube worldwide, and we are live every weekday at the times on your screen. Welcome back. We're keeping track of earnings from some big Japanese companies in Tokyo Trade today. Shares of Sony are under pressure. The tech giant announcing a 250 billion yen share buyback. It expects operating profit for its current year to be flat as it takes a currency hit to the tune of 100 billion yen due to the fallout from US tariffs. This as it posted a beat in its full year profits. SoftBank shares sharply higher after posting an annual profit for the first time in 4 years. Net profit coming in at $7.8 billion for the year, reversing last year's loss. Its flagship Vision Fund gained $2.6 billion on investments, getting a boost from stronger performances of portfolio companies like China's Didi and South Korea's Coupang. SoftBank has ramped up its spend in the AI space, earmarking tens of billions of dollars in investments towards OpenAI, chip startup Ampere, as well as the Stargate project in the United States. In the meantime, Nissan, which at one point Honda was in merger talks with, unveiled a slew of sweeping cost cuts, including slashing over 11,000 jobs and closing 7 of its plants. For the financial year just ended, the group saw profit almost wiped out, declining 88% from a year ago. The automaker's turnaround strategy takes place as it wrestles with looming US auto tariffs and rising EV competition, especially from China. New CEO Ivan Espinosa spoke to our European colleagues about the automaker's plans moving forward.
This new plan is anchored on 3 key pillars. First is to reduce our cost structure, and we have initiatives in place for both fixed cost and variable cost. We will also be redefining our market and product strategy, having a tailored approach for each of the regions in which we operate, and also having a more focused approach into which products we develop by ourselves and which products we develop with partners. That brings me to the third pillar of the strategy, which is relying and reinforcing on partnerships. Taking advantage of our alliance partners, Renault, Mitsubishi, and also now Honda, we will keep developing initiatives that will help us course through these difficulties we are going through today.
Earnings also out in Southeast Asia. Let's bring in JP Ong, who joins us with the report cards from Sea Limited and Moni. Let's start with Sea, JP. And you and I were discussing this earlier. It's building out the Fintech stack. And this could very well be increasingly the next big revenue driver.
And just to be clear here, Money is the fintech or digital financial services arm of Sea Limited. And you're right, this is going to be a bright spot actually for Sea Limited in the periods to come actually. But let's talk about the fact that Sea Limited has seen 4 straight quarters now of profit after recording a $23 million loss in the first quarter of last year. Not only that, if you take a look at this chart, you'll also notice that sequentially on a quarter-on-quarter basis, we've seen its profits grow by leaps and bounds. In fact, at one point, it almost doubled, and that's added about 70 to 80 million almost every quarter during that period. Now, we also take a look at the fact that e-commerce in Sea Limited continues to be the biggest driver of revenue for them, more than half of it coming from their online platform, Shopee, or shopping platform, Shopee, and their gaming arm, which is booked by, which drives mobile games, continues to be their biggest source of adjusted EBITDA. But as we mentioned a while ago, Money, which is their digital financial services arm, which they rebranded just recently, is now becoming even stronger in terms of growth. You'll notice here that in terms of the contributions to adjusted EBITDA or operating earnings for Sea Limited, you'll notice that digital financial services is almost at par with the EBITDA that's contributed by their e-commerce arm, which means that the digital financial services might be as if not more profitable vis-a-vis its e-commerce arm because of the revenue, of the amount of earnings and profits they're able to derive from the amount of revenue that they're also able to churn. Now, take a look at this. You'll notice here that they all have seen their outstanding loans offered on the digital financial service platform rise to about $5.8 billion US. The question, though, is when you're ramping up this quickly, can you actually maintain and manage your financial service arm and make sure that the risk controls are proper? If you look at their non-performing loans ratio for loans extended for 90 days, it's actually dropped to about 1.1%. And to put that in context, that's around the same NPL ratios that banks like DBS actually maintain. So if your risk management, at least with regards to your loans extended, is at par with one of Southeast Asia's safest banks, it actually means that you actually probably are showing that you're able to manage digital financial financial services, it's becoming a bigger driver, at least, for growth for this company.
It's such an important point when household debt levels are rising in Southeast Asia, and it's a similar narrative in India as well, and that's where the regulatory rubber hits the road too when it comes to the evolution of the fintech startup space. JP, thank you very much indeed for that. Right, we'll take things to the trade side next. India's ongoing negotiations with the United States expected to speed up as a delegation heads to Washington this Friday. Samir Kapadia of Vogel Group joins us after this break to discuss everything trade. Stay tuned. We are counting down to the market open in India. This is how we are shaping up. Let's give you futures as a guide. We're 15 minutes away from the official open. 24,730 is the implied indicated number, which, if it does materialise, would represent a lift of about 200 points or so. Dollar rupee is looking weaker, so the flip side here is that the Indian rupee is looking stronger against the US dollar to the tune of about 0.2% at 85.0570. Indian markets regulator SEBI has proposed the easing of regulations for foreign investors buying government bonds. SEBI is looking to boost investor interest in the asset class. Foreign portfolio investors currently need to disclose their investor groups while buying these bonds. SEBI has proposed to do away with this regulation while simplifying the onboarding process. We'll be watching shares of Tata Motors when the market opens. The automaker is flagging uncertainty in the wake of tariffs imposed by the United States. Tata Motors sees the US as its largest growth market for its Jaguar Land Rover division, but Trump's 25% tariff on foreign-made vehicles has led to the Indian automaker re-evaluating its profit forecasts. Tata Motors has not yet commented on if it would benefit from the US-UK trade deal. Some of the Land Rover cars that are made in the UK could see lower tariffs, but sales are still expected to slow. On the trade front, Indian Commerce Minister Piyush Goyal is reportedly heading to the US this Friday. Both sides are speeding up negotiations on a trade agreement. US Trade Representative Jameson Greer was on CNBC US overnight. He told our colleagues that the country is moving as fast as possible on negotiations with partners who are quote, ambitious.
I'm going for my standing call with the Indian Commerce Minister, who's my counterpart on trade matters. Then this afternoon I'm flying to Korea to meet with the Korean Trade Minister over the next coming days, as well as trade ministers from many other Asian countries who are gathering for APEC meetings. So all of this is happening in parallel, and we are happy to move as quickly as other parties are willing to move. Everyone saw the UK move very quickly. In Switzerland, in between all the meetings with the Chinese, I met with the Swiss president. They want to accelerate things. So we're moving as quickly as we possibly can with folks who want to be ambitious.
In the meantime, President Trump touting the trade effect in the India-Pakistan conflict. During his visit to Saudi Arabia, Trump saying he used trade as a tool to negotiate a ceasefire between the two countries. The Indian Foreign Ministry, however, saying trade was not a part of the military conflict discussions with the United States.
From the time of Operation Sindoor commenced on 7th May, till the understanding on cessation of firing and military action on 10th May, there were conversations between Indian and US leaders on the evolving military situation. The issue of trade did not come up in any of these discussions.
In China, Vice Foreign Minister Sun Weidong met Pakistan's ambassador. They discussed tensions between India and Pakistan. China also released a statement saying it supports both the countries in the ceasefire and is willing to play a constructive role in the issue. As all of this continues to develop, we're also tracking trade negotiations between India and the European Union. Bilateral talks are expected to end on Friday. This time, negotiators are focusing on core elements of the agreement. India is looking for greater market access and lower tariffs on key exports. EU wants New Delhi to slash tariffs on auto and agri products. The EU is one of India's largest trading partners, with $135 billion worth of goods traded in the fiscal year 24-25. Let's get more on all these trade developments and angles. Bring in Samir Kapadia, managing partner at Fogel Group, joins us now. Samir, welcome to the programme. Let's start with the politics between India and Pakistan, if we may. Times of India said Trump didn't broker an India-Pakistan ceasefire. Prime Minister Modi said trade never came up in the conversation on the evolving military situation. The important development is that both sides have stepped back. How does this latest conflict influence, perhaps, the timeline of a US-India trade deal?
Well, thanks, Sri. And I don't think it has anything to do with what the United States is planning to have in accord with India. In fact, all of the tensions between Pakistan and India have solely been relegated to what we would call a societal and public backlash. But in terms of Prime Minister Modi's Triple Crown moment for this year, and we're talking about a deal with the United States, a deal with the United Kingdom, and a deal with the European Union, nothing has gotten in his way, and many in the United States believe that these have an impact in actually isolating Pakistan further. So nothing is stopping Prime Minister Modi from achieving this geopolitical grand slam.
Interesting. Triple Crown moment. And is that going to culminate, Samir? We'll get on to Europe in a minute, but is that going to culminate in a US-India bilateral trade agreement, a deal by Diwali around mid to late October?
Yeah, Sri, that's what people are projecting. I mean, in fact, the starting pistol of the trade negotiations has been over the past few weeks. Next week, I think you're going to see some announcement from the United States and India, an accord to pause or ameliorate some of these reciprocal tariffs, which are set at 26%. But by no means will it address the long-standing matters that have plagued a U.S.-India partnership. And I think you're going to have to see some major announcements in terms of foreign direct investment from India and some large purchases made in agriculture, energy, and defense to placate the president's appetite.
I'm glad you mentioned defence, because the defence deals are really going to define the US-India relationship and no doubt be a centrepiece of a trade deal. Will there be an even bigger focus on defence cooperation because of the events of the last 1 or 2 weeks between India and Pakistan, Samir?
I don't think it's going to enhance them. It might accelerate those conversations. Frankly, there's still a little bit of reluctance within both the U.S. industrial base for defense and the Europeans in sharing certain kinds of technology, certain kinds of intellectual property. And those problems, I think, are going to prolong and complicate conversations. But to be truthful, I think you might see accelerated talks in terms of advanced technology and surveillance and electro-optical tech. You might see some advancements in drone capabilities and partnerships in manufacturing. So there are sort of what we call sweet spots within the defense platform ecosystem where you might see India play a role, just as it has in the automobile sector, where it's a tier 2, tier 3, tier 4 major manufacturer for the OEMs. They might play that same role for the Boeings, for the Northrops, and for all of the other major U.S. defense companies. I think that's where you're going to see the most aggressive enhancements in the years to come.
Samir, do you expect President Trump and possibly Defense Secretary Hegseth to visit India in or around October to formally announce a trade deal? We heard J.D. Vance in his conversations with Prime Minister Modi, and Prime Minister Modi said he looked forward to President Trump visiting India later on this year. Does that timeline make sense to you for the president to officially visit India and really put the icing on the cake here?
Well, you know, Sri, I've been doing this for almost 15 years, and I've never seen such alignment between the United States and India. And everything that I'm hearing here in Washington suggests that President Trump is very keen on going to India around that October-November timeframe to sign what will be a bilateral trade agreement. Keep in mind, for the viewers, that's not what's going to be signed next week or the week after. This is going to be a trade light deal. The major deal is queued up for the end of this year. And if Prime Minister Modi is able to get to EU during the summertime, this could be his mega year.
So a US-India bilateral could be the Kohinoor in the crown. But before that, Samir, we have Indian Commerce Minister Piyush Goyal returning from Europe. We've already seen a UK-India trade deal. I know there's still some work to be done there. But are we going to see an EU-India agreement before a bilateral with the United States? There's clearly momentum in this direction.
There's certainly sentiment within the Indian government to continue all these conversations concurrently. Remember, this is Prime Minister Modi's third term, and third time's a charm for him. He's not wasting any time, just the same way President Trump is not wasting any time. Prime Minister Modi might be having conversations with 2 or 3 or 4 countries and blocs. President Trump's having it with 50 or 60 countries. So I think there's every expectation for Prime Minister Modi to make sure as much gets done as possible before year's end, because ultimately you want companies to invest in India, because India is not about make in India anymore. It's about scaling in India. And Prime Minister Modi wants to see all that capital, all that hard work he's put in to building infrastructure now culminate into investments which are creating economic activity. And it seems that the world is being pushed into India faster than they're being pulled.
Samir, it's interesting to that point. India has been in the headlines in the past couple of weeks as a destination for Apple to relocate supply chains from China. Tesla has been talking about a cautious entry into India. Great for sentiment, but there's nothing material as yet. Is India in line for an FDI boom if all these stars are aligned under the banner of a trade deal?
I think it very well could be, Sri, but remember, the main purpose of entering the Indian market, as opposed to Vietnam, for instance, is when you're thinking about exiting China, you can't exchange a super tanker with a fishing boat. That's what you have with Vietnam. With India, you have that scale, you have that magnitude. And so there's this huge demand from both European and US companies to look at India not just as a place for cost and labor arbitrage, but for access to customers. And this dual economy that India can offer will be the ultimate boon for any European or US company. That's what they're looking for, that 400 million and plus customer base that they can't get anywhere else.
President Trump's tour of the Gulf states, let's let's pivot to that, Samir. And Saudi Arabia's economic reform journey of diversification, it does parallel India's goal to double the economy by 2030. Tech will be a big driver of that. Prime Minister Modi last month had a very productive visit to the kingdom last month. How important is the India-GCC economic corridor in terms of India's longer-term development?
Well, I think from India's perspective, and remember, you have to look at this through the lens of the Western market. It's not so much, what you're not doing with the GCC, but what you are doing. There's a large sentiment in the United States and amongst Western markets to wean India off of some of its oil and gas partnerships with, say, countries like Iran. And so if within that Middle East framework, India is able to know what to do and what not to do, then I think it will have a very favorable reputation with some of the Western markets it so desires to partner with. Because ultimately, all of that upskilling, all of the training, all of the investment is inevitably going to come from the Western markets. But to placate the Western markets, to make them feel aligned, I think India has to be very watchful and very wary about how much it exactly partners with some of these countries in the GCC region.
It's interesting, Samir, how India's efforts to diversify and lock in trade partners and linkages, nothing seems to be off the table. Even improved relations with long-time rival China is on the table, although it's being tested now. We hear from Pakistan crediting its Chinese-made J-10 jets for shooting down IAF Rafales. Is India ultimately being forced into a corner where it has to choose alignment with alignment with the United States or China?
Not at all. India's had a long sort of ethos of non-alignment. I think that has persisted, and I think that stands strong against the Gandhian culture that the country has espoused since independence. What India needs to kind of consider is what moves are tactical and what moves are transformational. With China, those moves are likely tactical. Remember, they're a partner of proximity, and you share a border with them. You got to be careful, and you really need to understand what you want to work with them on and what you might not want to. Whereas relationships with the European Union and relationships with the United States are transformational. Let's put this into perspective. The United States is now closer to a deal with India than it is with Canada or Mexico. That should really tell you something, that the neighbors of the United States are not even close to a deal in terms of friendshoring or allied partnerships, but they're closer with India. This is about transformational relationships versus tactical ones.
That said, it's complicating, isn't it? Complicated because India says it's proposing counter duties on the US to counter Washington's tariffs on steel and aluminium products. Isn't this going to be counterproductive to what New Delhi wants to achieve?
Well, I think New Delhi wants wins. They want to do a deal with the United States just as much as the United States needs to create a firewall with China. You have a mutual sympathy of sentiments in geopolitics that's never been as aggressive and has never been as potent as it is today. And frankly, Prime Minister Modi and President Trump get along extremely well. Where the pain points will be are mainly on the legacy matters, whether it's H-1B visas or whether it's around technology transfers, whether it's around what we really want to partner on and what we might not want to partner on. But holistically, both countries need each other now more than ever, and the willingness to partner has been very strong, Sri.
Yes. I'm glad you raised the issue on human capital and immigration of tech talent and the battle for top tech talent that still exists in Silicon Valley. How is US policy on immigration, which appears highly restrictive, going to balance that out?
Well, I think the United States now has used immigration tools as a way to enhance trade relations. That's to no one's surprise. And frankly, that's a bit of a change in U.S. policy generally. I mean, trade policy used to be about arithmetic. Now it could be about a number of things, including immigration policy. It's not a surprise to me, at least, that the United States and India have long had some disputes around immigration policy. if there's a soft landing there, I think it's got to be coupled with foreign direct investment. Look at the Infosys, look at the Wipros. If they are asking for huge, look at Tata consultancy services. If they're asking for huge concessions with visas, well, they better pair it with large foreign direct investments in the United States. So that tit for tat is the balancing act and the scale that Mr. Trump has on the Resolute desk.
Samir, from a sector level, how do you see the policy developing as it applies to pharmaceuticals? Because they were quite clearly at the sharp end of tariffs. Now, Trump has announced this executive order, and that seems to favor a low-cost or lower-cost pricing environment for treatments and drugs, and especially generics. Does that work in the favor of companies like Dr. Reddy's, who are looking to increase their footprint in the United States?
I think it absolutely does, but the devil's going to be in the details. What President Trump has announced is what they call a Section 232 investigation on the manufacturing of pharmaceuticals, meaning that the United States as a country, from a national security standpoint, needs to know how to make these things. So if there was a conversation to occur between President Trump and his administration and companies like Dr. Reddy's, it would be, hey, we'll continue your market access, but you better start thinking about moving some of your operations here as a way to counterbalance the inflow of your products. And at the same rate, the United States has long been plagued with a very convoluted, complex, and at times troublesome healthcare industry. Pharmaceuticals are way overpriced in the United States, and President Trump has made it clear to the American people that that's got to stop. He's trying to defend the average American consumer's pockets where it hurts the most, which is taking care of their day-to-day lives. So the question remains, can India be a productive partner in achieving the president's goals? Or are they going to think about this from a market opportunistic standpoint to gain market share? Because I'll tell you, you can't gain market share in the United States right now without having a little bit of skin in the game. And I think there are plenty of industries that India represents, whether it's the auto industry or the steel industry or the textiles industry, that they have put that skin in the game. Look at the Wellspuns, look at the JSWs, look at the Mothersons. There are a number of Indian companies that not only keep their market access, but they've expanded in the United States, and that's where the sweet spot is.
Samir, ultimately, what do you think the US-India bilateral trade agreement is going to look like? And we talked about how defense and energy could be a core constituents, but do you think it's going to be a zero-for-zero tariff structure? And what role do you think India will insist production-linked incentive schemes will play? Will it insist that US businesses invest in these such schemes as part of a deal?
I think you're going to see a four-part deal. You're going to see foreign direct investment commitments to up to $25 billion from Indian conglomerates. And the CIIs and the FICCIs and the export promotion councils and the Modi administration writ large are going to have to put that number together somehow. I think they'll get there. I think there's enough to get there. The second thing they're going to have to do is commit to at least $5 billion annually in agricultural purchases. Right now, India's purchasing around $2 billion. So how are they going to fill that $3 billion gap? I think it's largely going to be government-to-government purchases. And President Trump's going to insist that that gets done. Remember, he held China to exorbitant standards in the hundreds of billions of dollars. If he asks if you ask India for a measly $3 billion more, I don't think that's going to break the bank. Then you have things like energy, which is, hey, India, you can't buy from Russia and Iran anymore at a scale that we feel comfortable with. So you better get ready. You need to buy significantly more from the United States. Right now, that's around $10 billion a year. I think he's going to ask for $15 billion a year, whether that's in long-term LNG commitments and other oil and gas products. And then lastly, Sri, we talked about defense. There's a lot of runway there. Remember, India is one of the largest importers of defense arms and platforms in the world. I think they're the second or third largest importer. They're going to have to fill that gap somehow with U.S. platforms. So imagine $5 to $10 billion in Indian commitments for those platforms. I think that's where you have a soft landing. And from what I'm hearing in Washington, they might get there, Sri.
Interesting. And I suppose you'd add to that list commitments from India to buy US nuclear technology, especially SMRs, given the AI push in India. Samir, we've got to leave it there. So thank you very much indeed for joining me with that analysis. Samir Kabadi out there from Vogel Group. Thank you, sir. Now then, Indian markets have joined the trading day. We will take a look at some of the movers after this short break. We're back in 2 minutes. Welcome back. Indian markets have just kicked off and they are in the money, and looks like the benchmark Nifty 50 is looking to make a run on 24,700 and test that level. Let's give you the dollar-rupee exchange rate as well. We are seeing some firmness in the Indian rupee, 85.1690 against the dollar. Now, we will see some new names on the MSCI India Index starting on May the 30th. Let's take a look at shares of these companies. Murugappa Group's Coromandel International, FSN, E-Commerce Ventures and GMR Airports. Now, on the earnings front, Bharti Airtel shares are performing like this. Let's show you the board. They're up by 2.4%. The Indian telco beat quarterly profit estimates. That's thanks to a boost in revenue from last year's price hikes and a growing user base. Airtel also saw a net tax gain of nearly 29 billion rupees during the quarter. Let's take a quick look at shares of Tata Motors. We were talking about this earlier on in the programme. Very exposed to a slower growth picture and the tariff risk in the North American market, especially, down by almost 2%. Consolidated net profit tanked 51% in Q4. As we mentioned earlier, the automaker is re-evaluating its profit forecasts for its luxury Jaguar Land Rover unit amid US tariff uncertainty. Tata Motors will speak more about the guidance during a shareholder meeting next month. And quite clearly, Tata still yet to really price in the benefits of a US-UK or a UK-India trade deal. We'll leave it on that note, and that's it for the show today. Tomorrow we'll talk about India's growing smartphone market that's leading to the rise of the middle class and new age companies. We will hear from Tata Power about their expansion into the renewable energy space. CEO Praveer Sinha joins us for an exclusive conversation. That's it from us. And inside India, keep watching CNBC. Dan Murphy is up next with Access Middle East.